Rashi Talwar, portfolio partner and portfolio manager at Ashmore. Rashi, good to have you with us here. Good afternoon. Thank you for joining us. Sapna will take us through this exclusive which is coming in, OFS, in a few PSU banks, government raising resources. Your thoughts?
Should have been done a little while ago, I think, but let's just wait for the details and all of the fine print to come out. I think Nigel's point is very valid, that these stocks are typically ones with extremely low liquidity. So I think, in general, people should be careful, not just jump in based on some news that comes out.
There's Punjab Sindh Bank, there's IOB, UCO, Central Bank, Bank of
four of
Maharashtra.
them.
And Sapna is just clarifying that amount is, the OFS is 2,000 crores for each of the banks. They're looking to sell,
so there's basically
sell that much.
So 10,000 crores, and there are five of them. So that's essentially what's coming through.
But Rashi, expand on the point further. Not just on these 5 stocks, but in general, what is your stance on PSUs? It was the mother of all bull runs, like Prashant rightly said. Now they're off. Would you venture in again? I don't know if you have some exposure already to PSUs in general and PSU banks. What's your stance?
So, so we don't really have much exposure at this point of time. And our style of investing typically is to look at some, we discussed this the last time when I was there with you, is to look at where we see price dislocations, right? So I think given what we do, this really doesn't fall into that kind of style of investing per se, where we're looking at price dislocations and we're looking for opportunities where stock prices are significantly below what we believe is the intrinsic value. So not there right now. Not that I haven't been there in the past, but generally a space which, we don't tread in pretty easily.
Yeah, absolutely. No, I remember that conversation we had in our Diwali special show, that your style is that you look for significant price dislocations where the narratives and the price is simply not running away, and that's the space you look to play. I'm going to come back. We're going to ask you about where you see those dislocations now, but let's just complete the story on PSUs now. Rashi, coming back to now, the dislocations, which is your style of investing. Well, earlier we were in a market where there was hardly any dislocation. You could argue maybe there is this, maybe staples that no one wants to touch, or maybe some of the bank stocks. But now we've been in the midst of a time and price correction for several months now. Where do you see opportunity?
So, I think opportunity is starting to emerge in a bunch of places. And if you ask me, I do believe that the next 2 or 3 quarters at least the next 2 quarters are going to be really volatile. We have so much changing globally. So much uncertainty as to what the Fed is going to do, what RBI will do as a result, what's going to happen to the rupee, what's really going on, a whole bunch of factors. So I think all of these things, you can be certain of one thing for sure, and that's volatility. As far as mid-cap and small-cap earnings estimates go, I think we've still not seen them really get cut. I think those cuts are ahead, and the current quarter and the next quarter, we will see some more cuts on mid-cap and small-cap earnings, and I'm hoping there we see the opportunity emerge. Even now, we're seeing more opportunity in the large-cap space than the mid and small space. The mid and small space, mid-caps are still trading at 30 times one-year forward earnings, significantly ahead of 2 standard deviations versus the average. So I see opportunities more in the larger space rather than the small and mid space, and I think those opportunities will come, and they're going to come pretty soon. We just have a very uncertain, volatile time ahead, and that works when you're looking to pick stocks.
Well, hi Rashi, good afternoon, good to see you. And Rashi, the small and mid caps, they re-rated, but that was backed by earnings, because the earnings growth as well was better. Now the problem is that the earnings growth could lag the large caps, and that's what could give an additional reason for large caps to outperform, given valuations, given the earnings that we're likely to see as well between the two. Let's get a little bit more specific though on the large caps. What do you like? Tech, we've got a couple of numbers that have come out. And it appears at least we'll see some growth in FY26, some kind of visibility out there that discretionary spends will pick up as well. While banks that everyone says that valuation-wise, well, they are looking attractive. But it seems that has actually been the recent big underperformer. Your take on particularly these two?
So, Nigel, the difference is you can't look at it as a sector-wide story, right? Even tech is going to play out very stock-specific in this earnings season. One thing we know for sure that after a long lull, we've started to see order flow come through in the US, and people actually go in and place the orders with these guys. But at the same time, you're going to see a very different margin profile across the companies. You're going to see some of them which have weaker numbers because they're either losing a client, and it's going to be stock specific. So yes, tech is a sector we do have an overweight on and we are positive on, but I think you have to be very specific in terms of what you own. Same thing with the financials. I've been saying this for a while, large private sector banks, because for the last 8 months, we've been really worried about the asset quality cycle, especially in the urban, retail, unsecured space, credit card space. So, a smaller bank, a smaller private sector bank, more leverage to say credit cards or MFI or anything will not play out in the same way as a larger one. And you are absolutely right. On the upcycle, the small and mid companies have the ability to beat earnings or beat their large cap counterparts on earnings because they have more leverage to play out. But the same thing works in the negative when things are going down. So large cap earnings do, come in better than the small and the mid cap stocks. And that's exactly what my point is, that we haven't seen that happen in the mid and small as yet. So the earnings cuts to consensus have still not happened.
Rashi, I just want to ask you one more point with regard to the financialization theme, here in India. And that's likely to have a big runway. Some of these stocks, they run ahead of themselves. Case in point being a BSE that ran ahead, and then in fact we saw a sharp pullback. But yet again, in the last few days when the markets have pulled back as well, that's closer to a 52-week high. What do you like from this space? We had the management of Anand Rathi that joined us earlier today. Tomorrow we'll have Angel One as well. Some of these stocks have come in for profit taking. HDFC AMC a few minutes ago came out with a set of numbers. That one's moved to the low point of the day. So from this financialization theme, what do you like?
So, we've picked commodity exchange very early, and that's done really well, and we continue to like that a lot. I think you pick your bets where you feel that there is. We saw a price dislocation in it when you had, they went through their own issues with their tech space, and that provided an opportunity. You're absolutely right. A lot of these stocks, and it's not just the financialization space. Pick EMS space, right? Some of them are trading at 100 times earnings or 70 times earnings, and I don't believe it's the right time to invest in them.
Okay, so valuation is a big concern in some of these spaces. All right, Rashi, good to have you on. Next time we'll try and get your inputs on more specific niche pockets where you see those dislocations, price dislocations perhaps. Thank you for being with us today. Well, on that note, let's quickly